ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
Happy Monday, everyone. It is a new trading week, and I hope everyone had a great weekend as well. We are here to catch you up on what has been happening for the Aussie and also the Kiwi today. And there is definitely a lot to talk about from this morning in regards to developments with the Russia and Ukraine situation, which just seems to be very quick changes in sentiment as well. So please be cautious. I think this is a nice reminder to everyone just to keep the trade short and also to watch what is going on before you start entering trades as well. So we do have the Aussie and Kiwi in focus today. We've got Gimme going through the RBA meeting minutes from last week and also giving us a preview of the Rbnz interest rate decision, which is coming up on Wednesday as well. And before we get into the Aussie and Kiwi trade ideas and the DXY, I'll just share the risk disclaimer as well. And I'll read this out. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. And again, feel free to ask questions during the currency call if you are watching it live, if you're an LCMS Traders Club member, or within the EchoFin platform for the. And before I do go any further, just again, guys, please, if you are watching this on YouTube, make sure that you do subscribe as a member of the LCMS Traders Club by visiting the Jindal Thai website. So just to kick us off, we've got Gim Hong here, currency strategist with LCMS Traders, going through the RBA meeting minutes and then a preview of the Rbnz interest rate decision coming up later this week. So over to you now, Gimme.
All right, thank you, Scotty. What a way to start off the week with some fireworks coming from the Ukraine side of things. Okay, nonetheless, let me just share the meeting minutes with you guys. Okay, so last week, the Reserve Bank of Australia, okay, they actually released their monetary policy meeting minutes, okay, for the most recent meeting that was, I think, was taken place, I think, the first week of February. Okay, so then right now we have the, sorry?
It was just loading your screen, but it just came up.
Yeah, okay. So as you guys can see right now, the minutes, okay, is actually for the, well, 1st February. Okay, 1st February meeting, all right? Couple of points to take note here, okay? The first one being this, okay? Well, we all know that, you know, the RBA has been pretty, well, specifically Governor Low, okay, himself has been pretty, not all the while, he's actually, I would say, more of a cautious central banker, okay, cautious chief of the RBA, all right? So, you know, anytime when there's like some form of progress and things like that, be it in terms of the economy, Australian economy, you know, or monetary policy or inflation, okay, for some reason, okay, he will tend to downplay it slightly, okay, just so to, you know, not get the market overexcited, all right? But this time around, okay, I promise you, okay, what I'm going to show you right now, okay, is probably the most positive tone that I've seen from the governor himself, okay? So, okay, so, you know, basically they, what they carried out during the most recent meeting was that, you know, they ended QE, and then, you know, the reasons for ending QE, like they've mentioned here, there are 3 possible options being discussed, things like that, okay? So whether or not they should taper QE, they should end QE, or they should put it and hold it unchanged, okay? And then they move on, the conversation goes down to the progress of things in Australia, okay? And then this part over here, I quote, most importantly, since November 2021, better than expected progress towards the board's goals had been made. Okay, this is the first time, well, really, this is the first time that I've seen, you know, Governor Low or the RBA itself, okay, actually acknowledged something actually, give such a strong acknowledgement. All right. Members observed that the achievement of the goals was within sight for the first time in several years. Okay. So I think I mentioned this quite a few times before already. Okay. Inflation in Australia, okay, has been a bit muted. Okay, although it's not as low as the Japanese inflation data, okay, but nonetheless, it's still a bit, I would say, it has been like stagnating, has been low and muted for the past few years, okay, which is why Aussie's interest rate has been, low as well, okay. But right now, okay, members observe that the achievement of goals, okay, what goal? Okay, one of the goals that the RBA has is to achieve the 2 to 3% inflation target sustainably. Okay, sustainably is the key. Okay, but unfortunately, for the past few years, inflation barely achieved the goal. Okay, but then right now, it's very positive that the committee members actually, felt that achievement of one of the goals, which is inflation goal, okay, is within sight. Okay, the unemployment rate as well. Okay, unemployment rate was at its lowest since 2008. Okay, and underlying inflation was in the middle of the target range for the first time since 2014. Okay, that's what I meant by inflation target. So unemployment rate wise, just for your information, okay, it has already dropped to pre-pandemic level. Okay, for Australia, all right, unemployment rate in Australia has already hit below, okay, the pre-pandemic level. So it's actually very, very optimistic, I would say, in terms of Australian economy, okay? And then in these circumstances, members agree that it was right to draw the bond purchase program to a close, okay? So this paragraph itself has already tell us that, the two main goals, okay, unemployment rate and inflation target, okay, progress towards these two goals, okay, have been very, very, very positive, okay? And, within sight for the first time in several years. Okay, so that's the first point over here. Very optimistic view, okay, coming from the central bank. All right. Then the second point that I would like to highlight to you guys is actually regarding the reinvestment. Okay, so now that the central bank, okay, has stopped its bond buying, all right, so they are no doubt, okay, holding on to tons of bonds, okay, well, not as much as the Federal Reserve, but still they are holding on to quite a big sum, quite a big amount of bonds, all right? So, will they be ending this whole reinvestment phase of bonds anytime soon, all right? So that's the whole point being carried out, being conveyed over here. Members then discussed the reinvestment of the proceeds of maturing bonds. They noted that in Australia, there are large gaps in the maturity profile of government bonds, which is not the case in many other countries. Well, meaning, what this line over here is trying to say is that bonds have maturities, right? So the maturity from one maturity to another maturity date, okay, is actually quite a big gap. Okay, it's not like I'm not sure how the maturity dates are like for the other central banks bonds, okay? But for example, okay, if we were to have something frequent, it would be like maybe, some amount of bonds will be maturing this month, and then another batch of bonds will be maturing next month and the subsequent months, okay, so on and so forth. Perhaps on a monthly basis, that's probably considered quite a frequent, I would say, maturing date that come in for the bonds, okay, but not the case for the RBA's government bond, okay, Australian government bonds, I mean, okay, because there are like large gaps and things like that. I don't know how large are the gaps, but it may be like in terms of like 3 months, okay, the next maturity date may be 6 months down the road and things like that, okay. So that's the point that the central bank is trying to highlight over here. And then it says here, the next maturity of an Australian government bond is not until July 2022. Okay, so it's like some 5 months down the road. So this is what they are referring to, like large gaps. Okay, which provides the board with additional time to make a decision. Okay, to make a decision on whether the central bank should be reinvesting. Okay, for this July 2022 batch of bonds. Okay, or should they just not reinvest it, okay, and just let it mature, okay? So the impact is that if the central bank decides not to reinvest, okay, not to purchase any more bonds, to fill in the maturing July 2022 bonds, okay, that means once it matures, the central bank, okay, will have a reduction in the amount of bonds being held, okay, which is actually a good thing, all right, which is what we always call it the unloading of bonds, okay, which is what many central banks are, I believe, okay, hoping to achieve as soon as possible, because that will lead to policy tightening, okay. And members agreed that a decision about reinvestment will be made in May 2022, with the key considerations being the state of the economy and the outlook for inflation and unemployment. Okay, this last sentence over here simply tells us that the May 2022 meeting is a very, very, very crucial meeting, okay, where, you know, we can expect a major decision to be made, okay, in terms of the reinvestments of bonds, okay. Of course, all these depends on, well, the economic recovery in Australia, okay, the inflation and unemployment outlook, all right. So suppose, okay, this is an optimistic what do you call that scenario, okay. Suppose unemployment rate were to maintain at least at its current level or even inch lower, okay. Keep in mind, this is at the moment is lower than pre-pandemic level already, okay. So we wouldn't want to, okay, of course, ideally if you can go lower is better, but it would be a bit hard, okay, for unemployment rate to go down lower, okay, to plunge, okay. It's highly unlikely, okay, because it's probably at a, don't know how many, I'm not sure how many years kind of a low level already, all right. So for it to hit like, at the moment, I think it's around 3.7 or 3.8% in Australia, but for it to hit to like levels of 1.5% or 1.6% it's pretty much miraculous, okay. It needs, I don't know, some miracles to happen before it can go to 1%, okay. And of course, with ongoing COVID and things like that, it is very, 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 very unlikely, okay. So the best and the more, I would say, realistic situation that we can hope for now is for the unemployment rate to remain constant, okay, at the current 3-point-something%, all right, or, you know, from time to time perhaps inch lower and then inch higher, but as long as it's below 4%, okay, it's, you know, below pre-pandemic level already, okay. So maintaining the unemployment rate is probably the way to go, okay, for the Australian economy, okay. Then in terms of inflation, okay, personally, I would still hope, of course, things are going to be more expensive, okay, for the Australians, right? But I would still hope that the inflation level, okay, can still rise a bit higher, okay, before stagnating, okay, because right now, you know, like what the central bank has mentioned, you know, it's pretty close to their target already, okay, and since 2014, right, it has already reached its underlying inflation was still in the middle of the target range for the first time since 2014. Okay, so it will be good if we can actually, you know, at least, okay, stagnate at the current level, okay, or maybe go higher a little, okay, inch higher a bit, to give the central bank more confidence that, you know, Australia doesn't have to be like the other countries whereby inflation hit a 10-year, 20-year, 30-year, even 40-year high level before toning back down to its target range. Okay, so in this case, you know, in the case of Australia, inflation was low to begin with, and then it actually hits at the moment. It is actually within the target range. Okay, but if it can actually stagnate now, then it actually saves the central bank the trouble of bringing back inflation down from decades high level and things like that. Okay, so hopefully, you know, inflation will be able to sustain at this level, and then that will pretty much convince the RBA that, you know what, we are ready to go. Okay, and if that's the case, okay, in May, chances are the RBA will be, you know, not be carrying out any reinvestments, okay, because these bonds were being purchased, okay, in an attempt to provide support to the market, okay, and now that, you know, if everything is back to normal, not yet, okay, but if everything is, you know, moving well, economic recovery is good and things like that, then the central bank will deem that, you know, the economy no longer requires such support, such huge, tremendous support from the central bank. Okay, hence they will be slowly withdrawing all these bonds purchases and things like that, and unloading back the bonds. Okay, either unloading back, or in the case of RBA, you know, maybe choose not to make any new purchases to replace the current maturing bonds. Okay, so overall, I would say this minutes has shed a bit more light, okay, in terms of the optimism coming in from the RBA, okay. Any questions on this RBA meeting minutes? Okay, so if there's no questions on the RBA minutes, I would like to move on to the next interesting, I would say, interesting stuff, okay, that will be going on Wednesday, okay, the Rbnz monetary policy meeting, okay. So when was the last time we actually heard from the Rbnz? I think it was back in last November, okay, well, some like 3 months ago or something like that, okay. So yeah, I think some of you may have already realized that I haven't been talking about Rbnz for quite a while because, well, of the 3 months break they were taking, right? So just a recap of what took place last meeting, okay, is that the central bank, okay, the Reserve Bank of New Zealand carried out a dovish hike of interest rate by 0.25%, okay. So previously it was interest rate was at 0.5%, okay, and then after the Rbnz hike it by 0.25, right now it's at 0.75%, okay. So that's basically the main, I would say, main gist of things, okay. And then of course, I think the Rbnz actually expect interest rates to be at, I think, is it either 2% or close to 2%, okay, this year, which is a good thing, okay, because that means that we can expect more rate hikes coming in from the central bank, okay. So that was released in the quarterly economic projections material back in November's meeting, all right. So this time around, current meeting, okay, what can we expect, okay. So the meeting will take place on Wednesday, okay, the announcement will take place on Wednesday at 0900 GMT plus 8, okay. Also, all right, a press conference will be carried out at 10 GMT plus 8, 1 hour after the announcement, okay. We can expect an interest rate hike of 0.25% from the Rbnz, okay. That is, I would say, the default scenario right now, okay. The market, well, pretty much everyone has been, pretty much everyone will expect an interest rate hike from the Rbnz, okay. It's just a matter of by how much, okay. 0.25 is the default, okay. Don't be surprised if the 0.25% rate hike coming from the Rbnz lead to little or maybe even no strengthening of the New Zealand dollar, okay. If the interest rate hike is by 0.5%, okay, then, you know, it's likely going to be bullish for the New Zealand dollar, okay? Because keep in mind that last year when they first hiked, I think it was in July or August or September, I can remember. It's probably like the later half of 2021, okay? The central bank actually announced that maybe it's better if we take interest rates hike one step at a time at a denomination of 0.25%, okay? Initially, it was pretty hawkish, okay? We were looking at 0.5%, but then because, of COVID and things like that, they felt that maybe we should just, follow the other central banks out there, to take a smaller steps of increase, okay, of interest rates. Then we'll see how it goes from then on, all right? So we can expect interest rate to be increased by 0.25%. If it's a 0.5%, it will be pretty bullish for the New Zealand dollar, okay? And also, keep in mind, the quarterly economic monetary, let me try this again. The quarterly economic projections material, okay, will be released on Wednesday as well, okay? So, the main focus that I will pay attention to, okay, the main focus is to look for any changes to the OCR projection, OCR meaning the official cash rate, okay? So towards the end of the super long report, okay, the central bank will provide their views on, I think, quite a long-term view, I would say, like up to 3 or 4 years or 5 years of projection, okay, of where interest rates will be, all right? So I will be sharing, okay, the previous report and the current report, okay, once it's being released on Wednesday. I think it's, okay, if it's 10 and 9, okay, then I'll be covering what happened during the Rbnz meeting, okay, on Wednesday's daily currency call, okay. during the call, I'll be, making a comparison of the previous OCR projection, okay, back in November, and the current OCR projection that will be released on Wednesday, okay, and to show you guys if there's any hawkish projections coming from the members of the Rbnz, okay. Of course, if there is any upwards revision, okay, in terms of where interest rates will be in the near future, okay, near future can be as near as 2022, as far as probably 2024, 2025, okay. If there is any upwards revision, that will add on to the bullishness of the New Zealand dollar, okay. So the first main thing to pay attention to is the OCR projection, okay. The second thing, okay, during the previous meeting, okay, the Rbnz actually mentioned something about unloading of bonds as well. Okay, keep in mind they have already ended the SS purchase and ended its QE. Okay, I think it's during its last meeting. During the July 2021 meeting. Okay, and I think there was a quote. Let me look for it. Okay, so there was a quote from the November's meeting that says the committee expects to gradually manage LSAP, which is the large-scale assets purchase, okay, bond holdings down, well, meaning unloading of bonds, okay, in a way that maintains the smooth functioning of financial markets. More details on how bond holdings will be reduced will be provided early next year, okay. February is the first meeting of 2022. Okay, so we can definitely expect the Rbnz to provide us with more details on, how the bonds will be unloaded and, at what rate will it be unloaded and things like that. Okay, will it be like a $5 billion a month kind of rate? Or will it be that they will just stop reinvestment phase and things like that? Okay, so this piece of detail, okay, I believe it will be reviewed, okay, in the interest rate statement, okay, but at a very brief, I would say just a few liner or maybe one short paragraph kind of thing. Okay, it will be brief details, and then for more comprehensive details and things like that, we may actually have to dive into the quarterly report, okay, which is the monetary policy statement. All right. So all in all, okay, I would say I wouldn't expect the Rbnz to keep interest rate unchanged. Okay, not at this time. This is not the right time to actually hold it unchanged. Okay, like I mentioned many times already, 2022 is the year of interest rates hike. Okay, so Rbnz expect rate hike by 0.25%. If that's the case, the 0.25% may not. Okay, even if it does lead to a slight strengthening in the New Zealand dollar, okay, it may not last. Okay, so if you guys are planning to trade it, if you guys see a 0.25%, really, either try to avoid trading or, just scout for a short period, a very short period of time, okay, because the move may not actually last long. All right. But if it's a 0.5% hike in interest rates, okay, then you will be bullish for the New Zealand dollar. So we can actually expect the strengthening to be much more lasting, okay, much more sustainable, okay. And of course, interest rate is one thing, and then we've got to head over to, the interest rate statement or maybe even the report if time permits, okay, to see if there's any changes in OCR projection. Okay, and of course, details on the unwinding of bond holdings. Okay, so since this whole thing will be released at 9, okay, I guess before the daily currency on call on Wednesday, okay, I'll probably be giving a quick breakdown in case you guys, are trading and things like that. All right, in the Traders Club. And of course, okay, much more details, okay, will be provided by the governor, okay, Governor Adrian Orr of the central bank at 10 GMT plus 8, okay, in the morning, 1 hour after that, because he'll be holding a press conference, okay, and journalists will be definitely asking more questions about these, okay, and we only have like a short period of time to trade before we get potentially more details into what, the central bank's plan is, okay, in the near future. All right. So let me see. Any questions on the Rbnz meeting that's coming, and things like that? the reason, another reason why I was saying that, interest rate hike of 0.25% from the Rbnz may not lead to a sustainable strengthening of the New Zealand dollar. Okay, one reason is because everyone is already expecting this from the central bank. Okay, that's the first reason. Now, the second reason is because of the Ukraine-Russian geopolitical tension. Okay, 0.25% rate hike is the default. Okay, if you're telling me that that's all the central bank is going to do, then it really all fall back to how the progress of the Russia-Ukraine tension were to develop. Okay, if it were to worsen, then probably goodbye to New Zealand dollar and versus New Zealand dollar versus US dollar. Okay, but if let's say as of now, okay, like early this morning, we actually heard some positive news coming in from this whole development. Okay, so at the moment, it's pretty much like a risk on kind of mindset. Okay, if it's a 0.25% hike, then okay, it may actually receive some form of a indirect boost, okay, from the positive development from this whole geopolitical tension. Okay, but nonetheless, from now until Wednesday is still 2 days. Okay, from what we've known from the past 2 weeks, okay, things can change as quick as a few hours. All right, so later on in the during the European market session and things like that, we may be seeing more optimism, or we may be hearing some pessimism coming in from this whole saga. Okay, so really keep your trade short term, and we'll see how it goes on Wednesday. Okay, and then I'll break it down for you guys. All right. So if you guys have no other questions on the Rbnz or the RBA minutes released last week, then I'll hand it over to Scott for his analysis on the DXY. Over to you, Scotty.
All right, thanks, Gimme. And we'll get into this now just with the chart. I've got the daily time frame just to show what we're looking at. We are below 96 still as well, which is proven to be a decent support level. But again, the risk sentiment is shifting on and off quite rapidly with everything that's been going on with the news coming out of the Ukraine and Russia. So from a 1 hour time frame, we have seen some intraday bouncing from 95.70. I've got 95.50 down here as well. Just another point to consider. And then if that breaks, we could see, and if 95 flat breaks as well, we could see it trickle down to 94.60. Don't really see that happening, honestly. And I think we're just going to see a little bit of a tight range develop between, down around here at the, the mid 95.50s, maybe even a little higher, honestly. We've seen price hold up around here for quite some time now. If we look on the hourly, and if we do break 96 again, we do have a little bit of upside. So it could be the point here where we start turning back up. But just to look at the news to put things into perspective as well. And there was a little bit going on Friday night, more later in the session. We did have FOMC Barnyard speaking. She did mention that interest rates definitely are looking to come up ASAP as well. And then you add this into the situation with Ukraine and Russia. It's a tough one to say bearish US dollar. Just my thoughts. Now, for today, it is Monday, and this is GMT +8. We do have the bank holiday in the US, so something to take note of. So most likely we will see a pretty docile session. And unless there is more news coming out, and be aware of that, and we will be sharing any breaking news around the Ukraine-Russia situation as well within the EchoFin chat for the LCMS Trading Club members in there for Tuesday. Just having a little scroll now. Not a great deal either. We've got the flash manufacturing PMI and the flash services PMI, but I think what's driving things is just this urgency on hearing from the Fed. So I think for tomorrow, most definitely preparation for the Rbnz would be a good decision, because that could be a really strong catalyst if we do see rates going up higher, even a little bit more than expected. But that's one to watch for. And for the US dollar above 96, I'm still waiting on to take some buys, but really I'm hesitant until we get a little more clarity from what's going on with Ukraine and Russia, and obviously the next FOMC meeting. So really, until we get that, it's just sort of keeping things very short term with trade ideas. Now, we do have the Aussie and Kiwi in focus now with Jin. So I'll pass it over to you now, Jin.
Thanks for that, Scotty. And what a way to start the week. We've had ready to attack, and then we've had, ready to talk through the markets. We've seen, first time I've seen Monday mornings move that much, which actually sets up quite a few trade ideas or possible scalping trade ideas, and also maybe setting up for the slightly medium to longer term approach. So what we're looking at here is that with the Aussie in focus, with the Aussie dollar in focus here on H4 time frame, like Kim Hong has been sharing with you already, we've seen the Aussie dollar perform quite well. We've seen a bit of movements there. What I think is going to happen here for the Aussie dollar, as we see the last 4 candles on H4 time frame, is bounced off this 7164 level. Right now, approaching that recent high point of 7213 or 7216 thereabouts. In terms of a trade idea, what I'll be looking for is for possibly buying opportunities for that continuation. So I would say that look for buying opportunities above that point. It is in the middle of a support and a resistance level. I would say your stop loss can be quite tight, especially in this case with all the uncertainty. There are 2 ways to trade. I believe that there are 2 ways to trade right now. One is either size down, have a bigger stop loss so that you can sit through the volatility, or keep with your trading size, keep your stops very tight so that you don't get caught out in any surprises. In this point, I would say stop loss at about 20-30 pips, take profit towards the high point of 73, buying opportunity at about 7220. You're looking at almost a 1:2 risk reward ratio towards the upside for the Aussie dollar above that recent high point of 7216. So 7220, buying opportunity, 20 pip, 30 pip stop loss, about a 60 pip take profit level, a 1:2 risk reward ratio towards the upside. With that said, I think what's more interesting is the New Zealand dollar. New Zealand dollar, the last time we spoke about it, expected it to drop lower, but with all the uncertainty, the geopolitical uncertainty there, and also with the pending rates decision to be released in 2 days, I think that I'll have a slightly different approach to Kim Hong, is that despite anticipating the 0.25% increase, not having a big move, I think over the next couple of days, if we do see the New Zealand dollar creep upwards, which I think is quite likely, I think that it could move towards that 6740 level. If it does break above that point, you could be looking for buying opportunities, and it will be a nice tight stop loss at about 20-30 pips again. Take profit in this case could go up to as high as almost 90 pips. You're looking at a 1:3 risk reward ratio towards the upside for the New Zealand dollar, towards that 6840 level. Why 6840? If I zoomed out, you can see that the last time we hit that point, the last time it broke above this resistance level, this near resistance level, was in December last year. We saw it break above and almost go straight towards that resistance of 6840, hit that point before turning back down. So I would anticipate that if it does creep upwards, we do see an interest rate increase from New Zealand, from the Rbnz, we could see it move towards the upside. This case, because it's a 1:3 risk reward ratio trade, you do have a few trading opportunities to get out. So you could even get out at about a 1:1 at about that point. So at about 68 level, you could be looking to get out a 1:1 risk reward ratio. And then if it does continue upwards, you could be looking at following that trade towards the 1:3, towards that upside, towards that resistance level. So a few trade ideas here. I would say that, again, to repeat, either size down, have a slightly bigger stop loss so that you can sit through that volatility with all the uncertainty in the markets, or keep with your trade size, keep your stops quite tight so that, you know, in the worst case, you get stopped out, but you have a small loss. With the news to be released as well, we could see that quick move towards the upside. With all this that's happening now, I think to add on to what Scott was just sharing with you, the dollar index has been tracking lower. That 95-60 level, like Scott was sharing, is quite crucial. I think that if any conflict does happen, we could see it drop to that 95 flat. But I believe that with that move towards reserve in terms of any conflict, we could see that drop happen, but it could bounce back up very quickly, because that move towards reserve would be towards the US dollar, towards gold, and possibly even towards the yen pairs as well. So I think a lot more trading opportunities to be ahead through this week. Relatively short term things to pay attention to. I think that this week will be a week that you would want to get into trades, but not set and forget, get into trades, keep it well managed, you know, get ready to get out of secure profits, get out of trades when any unforeseen news gets released and catches everyone by surprise. With that said, I'll pass it back to you, Scotty.
All right, thanks, Jen, and hope to see everyone in the chat as well for the LCMS Trader Club members. And thanks again for watching, and hope to see everyone tomorrow for the Euro analysis. Have a great rest of your day, everyone. Thanks for joining us.